Hi, good evening, everyone, and thank you for joining it. I, Komal Narang, on behalf of ICICI Prudential Mutual Fund, welcome all our investors to this call, which is very, very special to all of us. In fact, today we are celebrating 21 years of one of our flagship scheme called ICICI Prudential Multi-Asset Fund. Before we go any further and celebrate this occasion where we are talking about 21 years of MAF, let me just go back to the creation of this category itself and allude on a fact that there are many years when different asset classes would have done well. For example, today we are seeing for a very long time that equities as an asset class is making investors very happy. While in 2015, there was nothing more attractive than debt as an asset class. And in 2020, there were many investors where gold shined in their portfolios. So why not have a category that culminates all the asset classes and on a very, very programmed and a formula-led basis, manage the allocation of money for the investors through funds like multi-asset. Within that, ICICI Prudential Multi-Asset Fund is one of the oldest fund in this category and has gone beyond investing in equity, debt, and gold, and has opportunistically used avenues like silver, crude, aluminium, and even natural gas that you would have seen recently as one of the investment options. While we speak, the fund has an AUM of over 24,000 crores with more than 6.5 lakh folios which are active. We have with us on this call uh, Mr. S. Naren. He needs no introduction, but it gives me immense pleasure to tell you that while he's the ED and CIO of ICICI Prudential, he has also managed ICICI Prudential Multi-Asset Fund for close to 15 years among the 21 years that we have been speaking about. So, Naren, thank you and welcome to this call where we have our investors listening to you. Naren, before we go into the fund, I think I would want to attempt slightly different question to you today before we begin. Uh, it's known to all of us that in the last few years, there are a lot of new investors who have become, investors into our schemes or other schemes in the industry. There are more than 8 crore folios that have opened up, demat folios that have opened up in the industry. And you have a long vintage of an experience of managing funds yourself. Why not just maybe take us through your journey as a fund manager? What all you would have seen, because you would have seen one of the largest cycles, maximum number of cycles in this market, and what you would have seen happening around you. If you could just take us through that, and then we go into the details of the category and the fund.
Welcome to all of you. Let me first wish you in advance a very happy Diwali and festive season. It gives me great pleasure to talk on the 21st year of completion of Dynamic Fund turned multi-asset fund today. So it gives me great pleasure to talk to you today. Komal has also asked me to talk on something very close to my heart. So I started working in the year 1989, and obviously that is the year I started investing as well. And the first 5 years were very interesting. It was possibly the most turbulent years in investing, but in the third year we had Arshad Mehta, but I did not have much money. So consequently, I neither made money nor did I lose money, but maybe my ignorance and maybe my lack of speculative enthusiasm was very useful. But overall, 1989 to 94, 95 was one of the most positive periods in stock market history that you can ever get. And that entire 5 year period where I spent a substantial part of time as an investment banker got me thinking that there is only one asset class called equity, and got me a feeling that no one should invest in anything other than equity. And while I was an investment banker in 1994, I was so captivated by equity that I chose to become a stockbroker in the year 1994. And I said, not only should my investment be in stock equity, but my career also should be in only equities. And that is how I became in 1994. So maybe I was too young. And in 97, 98, I was after the Asian financial crisis and problems which started with an issue called MS shoes. Frankly, I was down in the dumps with my entire view that there is only an asset class called equity. And I was so captivated by equities as an asset class that I even believed in leverage, badla, everything to do with equities. And it was a disaster. 97, 98 was a big disaster. What people don't know in 1997 was that it was a year where 97, 98 was periods where interest rates shot up to record levels, that even the biggest groups in the country started borrowing at 16, 17%. And individuals had to borrow at 20% at that point of time. And this was a complete learning for me, which I never knew in 1994, that interest rates could go to 20% for borrowing by individuals, and companies belonging to the best groups in the country started to borrow at 16%. So in 1997, I started reading books on Warren Buffett, and that was the only book available at that point of time, and Peter Lynch. And in those days, you have to remember there was nothing called internet, there was nothing called CNBC, there was nothing like that, and all you had was these books and the newspapers and the magazines. And I read all of that and realized my mistakes. I didn't even know the word called multi-asset or asset allocation at that point of time. And but I realized my mistake at that point of time, and then said, no, this is not the way to invest if you wanted to make long-term money, which is the reason why we are all in investing, and changed ourselves. I was running a stockbroking firm at that point of time. And I started telling people that there are times when you have to be careful. There are times when you have to be aggressive. There are times when you can be moderately aggressive. And in 1999, 2000, again, there was a big boom due to the internet revolution in US in 1999. And you had the entire Ketan Parekh saga. And I was deemed to be a person who was very, very cautious at that point of time. And people did not realize that there was a lot of learning I had taken from 1994 to 1998 at that point of time. So while I was deemed very cautious, but actually I'd learned. I mean, I don't think I knew the word called asset allocation at that point of time, or I knew the word called multi-asset at that point of time. But I knew that I had to be cautious, and I used to tell everyone, and I was labeled a bear in the year 1999. So it was very, very frustrating for me because many people chose to leave my stockbroking firm and go to people who are more positive. And end of the day, I said, no, I have to leave Chennai and come to Mumbai. And it was only in the year 2001 too that all my customers realized that what I told them, that you have to be cautious, turned out to be true. And this was the kind of learning. So luckily, thanks to my love for equity, I got a chance to work in this great organization called ICICI Prudential in 2004 in equity as a fund manager. And again, in those days, ICICI mutual fund or any mutual fund for that matter actually thought of itself only as an equity mutual fund organization. And 2004 to 7 again, it was equity mutual fund, and equity mutual fund. And 2008 struck, and it was shocking to me, to say the least, when people lost so much of money in equity again. And in this case, frankly, all the learnings of 98 and 97, 98 was not enough, because at the end of the day, the whole mutual fund industry itself at that point of time was an equity mutual fund industry. Nothing could be done. And in 1997, I used to tell people invest in Discovery, but people used to give me money in infrastructure fund. And but the fact was that people lost money. So next, again, I got a lucky opportunity to become CIO of ICICI Mutual Fund. So I said, this has to be changed. Because when we met people in end 2008, after the lemon crisis, it was too pathetic to watch investors having lost money in 2008. Some of them had lost 40-50% if they had invested in 2007 end. And I said, this we have to change. And thereby, when we became CIO, between me and Nimish, we said we have to create categories where investors can make lesser money, but they should certainly lose lesser money. The second is more important than the first. And that is how this entire category called ICICI Prudential Balanced Advantage Fund came up. And balanced advantage as a category we popularized. And at that point of time, we never knew that that would become a category which the entire industry would later take it up. And it was such a pleasant surprise for me that the entire industry took it up as a category, what we popularized initially. And it was such a happy feeling for me, because I knew that if a year like 2008 came, the industry and the investors would certainly be in a happier frame of mind. And we said that that is the way it should be. Even at that time, when we looked at 2008, we knew that the asset class which had done well was gold. And when we looked at 2007-8, one of the few asset classes which had gone in the opposite direction in 2007-8 was gold. But we didn't have a single fund which actually had the opportunity to invest in gold and equity. But SEBI in the scheme categorization gave us that opportunity, that in 2018 middle, we actually got that fantastic opportunity to actually create a category which could invest in equity, debt, gold, REIT InvIT together, and exchange traded commodity derivatives later. And we were so happy, because the lesson of 2007-8 was very simple, that the only asset class which went in the opposite direction in 2008 was gold. And we, thanks to SEBI categorization, got a strategy which had gold in it, which was there from 2018 June. So I was the fund manager of ICICI Prudential Dynamic Plan, and I was so happy to be involved again in multi-asset, because it was a category which was something which would involve all these asset classes. And people used to ask me, you're an equity person, why are you in multi-asset? I used to tell them that finally, at the end of the day, my learning of 2008, my learning of 94 to 98, my learning of 99 to 2001 was that investors have to actually be in categories which are defensive in bear markets, at least more defensive than a pure equity fund. And for that, there is no other categories which are better than balanced advantage and multi-asset. And people said, when do you think such an opportunity will come? I said, how do I know? No one knows all these things. But I said, it is the kind of category which my learning of whatever the 20 years that I had worked in 2019 was telling me that from 1989 to 2019, if I had worked for 30 years, you have to be in such categories. Finally, it is wise to have categories which are defensive, which can make use of events which no one can ever predict, like COVID, or for that matter, Lemon, or for that matter, World Trade Center. or for that matter, Asian financial crisis. Not that these products were available at that point of time, but no one could predict. And that is how this whole category came. What we learned is that finally at the end of the day, asset allocation is one of the easiest way to make money. In 2012-13, I used to go all over India just after I became CIO. I used to tell them people have not made money in equity for 5 years. People have made real estate money for 10 years. Why don't you switch from real estate to equity? People would say real estate will keep on going up. Equity will not deliver return. See 5-year return 2008 to 2013. Where is it given from 2009 to 2013? I used to tell them that is the beauty of investing. I have a guru called James Howard Marks who talks about cycles. So he says if a cycle is done too well, be careful. And if a cycle is done too badly, be very, very positive. And that was what made me positive, but I could not convince anyone in India to actually sell real estate and move their money to equity in 2013. So why is multi-asset a great asset class? See, it is an asset class which has all the asset classes. So if you take equity, you take debt, you take gold, you take exchange traded commodity derivatives, you take REIT and InvIT, it has everything in it. And many of these asset classes are not correlated. So take gold, for example, did very well in 2008. Equity did very badly. 2020, equity didn't do well. Gold did very well. So if you take REIT has been doing very badly of late because finally at the end of the day, there is some problem in office space at this point of time. So REIT is doing badly. So REIT is not correlated with equity at all at this point of time. The worst performing asset class at this point of time is REIT. So when you get everything, what happens is I have a guru called James Montier. He says, what is the best way to invest for the long term? You should have an unconstrained asset product. So here you have an unconstrained product which can invest in so many asset classes. I do agree you can't invest more than X percentage in certain asset classes, and you cannot reduce beyond certain asset percentage in certain asset classes, but at least you can invest in all the asset classes. And that makes multi-asset very attractive because at various points of time, different asset classes will do well. Take, for example, gold today. Gold has done very badly in the last 9 years, 11 years. Gold has done very badly in the last 3 years. REIT has done very badly for the past 3 years. Equities, for that matter, small cap has done very well for the past 3 years. Mid cap has done very well for the past 3 years. Even large cap has done very well for the past 3 years. Debt has been a very, very average asset class. And in this product, you can do commodity derivatives. So you can do things like aluminum, copper, zinc, silver, etc. Of course, you can do it in only small quantities because finally those products are not very liquid. So those are products where, again, different times, different things do well. And that is the advantage of those asset classes. So you're getting all kinds of asset classes, and that is a big benefit within one. What does it require? Does it require one person? Can that person have knowledge of all these asset classes? Certainly not. So if you look at my own knowledge comes primarily from equity, and I do have an understanding of which asset class to overweight. But I'm not an expert on gold. So we have a fund manager who can look at gold. So that person is only focused on gold. And that person is only focused on gold and exchange traded commodity derivatives. On the other hand, there is a person who's just focused on debt because that person is completely focused on debt. That person also looks at REIT, InvIT, etc. So am I an expert on debt, REIT and InvIT? Certainly not. So there is a person who needs to look at debt and REIT and InvIT. Now, can I look at all areas of equity given my responsibility? The answer is no. So I have a colleague who looks at all areas of equity. He can look at large cap, mid cap, small cap, all three. Can this fund invest in small cap? Certainly. Can it invest in mid cap? Certainly. Can it invest in large cap? Certainly. Can it invest in all the sectors in equity? Certainly. So the advantage of this fund is that it can invest in all the areas of equity. There is a person who is focused on debt. There is a person who also does arbitrage when necessary. And there is a person who also does derivatives necessary. So we have kept a fund manager who is specifically involved in doing any derivatives if needed in this fund. So that also we have kept in this fund. Is it possible for one person to run this fund? Certainly not. And in a way, if you look at it, is the past return sustainable? I don't think so. And if anyone believes that the past return is the reason why you want to invest in this fund, I think you should be worried. Because the past return came in certain circumstances which may not happen in the future. So I don't think you should invest for the past return coming in the future. But is it a great category? Certainly, because you get all the asset classes in one fund. And depending on where we think there is return potential, we can increase that weightage to an extent. So if we think that REIT InvITs are very attractive, we can slowly keep buying REITs and InvITs. If we think debt is very attractive, we can keep on increasing debt. For example, if we think gold is attractive, we can increase gold. If we think equity is attractive, we can increase equity. So that is the advantage of this fund. And why have I been involved in this, both the dynamic plan and the multi-asset fund for most of the period that I've been in this company and not involved in the other funds? For me, to run a more unconstrained fund, I found very enjoyable. And that is the reason I've been involved in this fund. And I found it to be one of the most interesting funds because the unconstrained nature of the fund, that it can do large cap, it can do small cap. And I can ask my colleagues, why don't you increase debt? Why don't you reduce debt? Why don't you consider increasing gold? Why don't you consider decreasing gold? Why don't you consider REIT? Why don't you consider InvIT? Why don't you consider doing more arbitrage? Why don't you consider doing reducing arbitrage? And I enjoy that. And each of my colleagues are there to help me in this. And that is why I have enjoyed being in this fund. Having said that, I want to reiterate the past returns are not sustainable. And if anyone believes that you're going to get 21% per annum all the time, please believe that it is not likely to happen. Overall view on the markets, considering I get the opportunity to talk to you only occasionally, and on the Diwali view, I think India is a great structural story. There are hardly any good structural stories like India. Why is India a great structural story? Is primarily because the current account deficit has been very well behaved, inflation has been very well behaved. In many of the other countries in the world, neither the current account deficit nor the inflation has been well behaved. And due to that, what has happened is that there has been a huge problem in the macroeconomic side. What is the problem in India as we speak is that because we have handled the macroeconomic situation too well, the valuation is too high. And that is the only problem. And due to that problem, it is difficult to be very, very positive on equity. You can be only moderately positive on equity at this point of time because there is a problem of valuation in all segments of the market. The valuation problem is biggest in small cap, then in mid cap. In both, it is very high. In mega cap, it is smallest at this point of time. But nevertheless, valuation is a problem in equity at this point of time. But is India a great structural story? The answer is yes. Because it is a great structural story and valuation is the problem, if people have to invest at this point of time, we have been telling people you have to choose only categories which are hybrid, which are like equity savings category, the multi-asset category, the balanced advantage category, the equity and debt category, kind of categories to invest at this point of time, because pure equity doesn't appear to be that cheap at this point of time to give a very easy bull call at this point of time. And that is a challenge at this point of time. From an investor point of view, the valuation of the market is certainly a problem for the market. Does it mean that the market will fall tomorrow? On Monday, the answer is no. No one has a view that market will fall from Monday or something like that. But our learning is that when valuations are low, bet on equity in a big way. When valuations are high, be more careful and look at more defensive categories like hybrid, or follow asset allocation principles while investing. At the same time, it is impossible at any point of time for anyone to predict what will happen to markets immediately. Because one of the lessons that we have seen is that always markets move on the basis of information and news, which is unpredictable. Did we all predict that there will be a problem in Ukraine? The answer is no. Did we all predict that there will be a problem in Hamas? The answer is no. And therefore, what happens is it is very difficult to predict what can bring the market down. And but at the same time, having a framework based on valuations is pretty useful for investors. And in my opinion, investors have to be focused on valuation as a framework on a continuing basis. So this is my learning from the valuation framework point of view. Should investors consider investing in debt? Certainly. And they can choose to invest in debt or choose to invest in hybrid categories like equity savings or balanced advantage, also as a way of investing a part of their money in debt. Which model they need to consider is certainly their choice. If they have old investments in debt, they should continue with their investments. If they have old investments in categories like asset allocator fund or thematic advantage, they should certainly continue. Clearly, international markets are cheap. So if you have old investments in international markets, you should continue with all your international investments. This is how we look at the market at this point of time. So, this is the way we are looking at things. And I think some of you have given questions, and I would be happy to answer those questions. And over to you, Komal. Again, best wishes for Diwali. Thank you.
Thanks, Naren. I think very systemically, what we have spoken about is your investment journey, multi-asset as a category, and then how ICICI Prudential multi-asset fund is trying to create wealth for investors. We have few questions, Naren. In the interest of time, we'll take the 5 most frequently asked questions. There are few very business related, which I'll answer at the end. The first question that we have been asked most frequently by investors is that are there any limits on the commodity exposure that you take? And what are the triggers that you evaluate, or are there any models that you have in place while taking commodity exposure into this fund beyond gold also?
See, commodities don't lend itself to valuation based model, common, unfortunately. So we have my colleagues, there are equity colleagues who look at commodities. There is Gaurav who look at commodities. So both of them do a lot of work and decide that we have to look at commodities. In fact, some of the commodities are actually looked at on a technical basis also. And we can't use valuation models to buy commodities. And there are times, without any reason, oil corrects, we might look at them. And unfortunately, commodities don't have price to earnings or price to book kind of frameworks. But we have a colleague who looks at commodity stocks. So he looks at commodity price trends, and we have Gaurav who looks at commodities. Between both of them, they do work and come to a conclusion whether they have to put money in commodities. And that position can never be large, because the markets are not liquid enough that you can take a big exchange traded commodity derivative position in any commodity other than gold or silver. So frankly, you can rest assured that can't have very big positions in any commodity, ex gold and silver.
Sure. So there's one more question which is asked very frequently on our chat today, that most of our investors have had exposure into our balanced advantage fund. Uh, Looking at your market view, do you think multi-asset fund or balanced advantage fund as a combo, or how do you suggest the recommendations for investors going forward from here?
See, it's tough to answer this question, but I believe that multi-asset gives you a slightly more aggressive product, but with more categories. So you don't get gold in balanced advantage fund. So you don't get exchange traded commodity derivatives in multi-asset fund. I mean, in balanced advantage fund. So I believe that you should consider this to make it more broad-based. Maybe have both the products. And I would treat multi-asset as a slightly more aggressive product with higher return, higher risk kind of characteristics. The way I look at it, I don't know how the riskometer treats it. That you'll have to check in the document.
So as an extension to this, there's one of our investors who's asking that he's considering a combination of BAF and multi-asset as his retirement corpus through an SWP route. So again, the question remains that would you suggest a percentage? Would you want to attribute some combinations, or uh, how do you look at that?
I'm a person who completely goes away from this percentage. I like both the products a lot, and certainly people can consider it. If they are in the 0% tax bracket, I would also recommend adding some debt mutual fund. Actually, if they are in the 10% tax bracket also, I would consider adding some debt mutual fund also into this. But it's, I think, very unfair or and wrong for me to put a percentage. So that's why I will not do it.
Sure. I think there's one question that can this fund take exposure into international equity?
Technically, both the products can balanced advantage and multi-asset, but we hardly have limits as an AMC. So if the limits get opened up, at some stage, then we will look at it. But right now, you can take it that there won't be an investment. If the whole limit gets opened up by the regulator, by SEBI, then we'll look at it. But till then, you can rest assured there won't be an investment in the near term. So till the limit gets opened up.
Sure, Naren. I think your parting comments with a closure that there are certain concerns that people have raised about, the war that's going on in one part of the world and the upcoming elections, starting with the state to the general elections, the risk that market can see, and what is that investors should do at this point in time, and that can be your last question.
I keep telling people, did any fund manager from Bombay tell you Ukraine will happen? Answer no. Did any fund manager from Bombay tell you Hamas will happen? No one. No one. Did any fund manager correctly guess all the elections in India? Answer is no. So, was market volatile in all election years? Answer is yes. So, the solution is choose categories like balanced advantage, equity and debt, multi asset in an election year. Even if it delivers lower returns than equity, relax. That is what I believe is the right model, because no fund manager can predict election, geopolitical events, or anything. But volatility is there to stay. Look at it on month end, the market was so bearish. Suddenly now the market has been bullish. So what changed between last week and this week? Even there has been more intense shelling in Hamas, in Gaza Strip. So I believe that it is wise for us to actually just stay with a disciplined investing into hybrid funds, and then hope that we manage your money well. Our intention is to manage your money well with the entire team that I have in ICICI Prudential. That is the goal that we have. And we hope we deliver it to you. That's all. And wishing all of you a happy Diwali and hope your Diwali can be brightened with all the work that we do. And that is our intention. And we hope we manage to do it and without any guarantees, as I told you. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.